Hello guys and welcome back to the channel. Today we will be looking, yes, on the previous video we looked at type of entries which we use, and today we'll be looking at the management and when to move our stop loss to break even. So we will start with this pair right here, euro dollar. Euro dollar, as you can see, it was moving in an impulse correction impulse and it was correcting. This was a correction, a bigger correction in form of a rising wedge. It touched the wedge the first time, second time, and it was heading to the third touch. Now this is where we are going to enter from. When it was approaching the trend line on the third touch, the market started slowing down, and on this retrace candle here, it's where you would have entered, and then you place your stop loss just above the structure, above there. And guys, always remember our we always risk 1 to 2% of our accounts for each trade. That's a topic for another day. Risk management. So how we manage these trades, when we are on top of structure or below of the structure, when it's about to reverse to go up. Here we are on top of the structure. It's about to reverse to go down. When we are on top of the structure, we are normally patient. We don't move our stop loss to break even fast. We give the market time to breathe and do whatever it wants to do. But when it's in the middle here, when we take a trade from the middle here, I'll show you. We after the our trade moves to 1% in profit, we move our trade to break even. Like for this one, it reached to 1.38%. I had not moved my stop loss to break even. My stop loss was still up here. When it's on top of the structure or below the structure, we normally wait for the market to impulse away from our entry, from where we entered from. When it impulses away from our entry, that's when we can move our stop loss to break even. For this one, we entered, it reached to 1.38%. It moved back up, it almost took us out, and then it moved to our direction again. And when it started creating this correction, I moved my stop loss to break even. After moving your stop loss to break even, now you can start looking for scaling in or adding more trades on top of this trade, because already you have removed risk from your first trade. It is in profits. So when you enter such trades, your first profit target should be on the trend line, and your next profit target should be below here where the correction started. But it doesn't always get down there, and for that reason, that's why we manage our trade this way. After every correction, we move our stop loss above this that structure. Like here, when it impulsed, I move my stop loss to break even. When it created this structure, I moved my stop loss to above this structure. It broke this trend line impulsively. After breaking this trend line, it created another structure right here. After it broke this structure, you move your stop loss above this structure, and you after that, you see it impulse down to a take profit here, and you manage to get if you reached 1%, you manage to get 9.33% profits on the next trade. As you can see, when you enter from here, faster after the impulse and a bigger correction in form of a expanding triangle. If you enter from here with this retrace candle, If you immediately move your stop loss above the structure, if you immediately move your stop loss to break even, you would have been stopped at break even. You will not have made any profit in this trade. For this one, our profit target was here. You see, if you would have moved your stop loss to break even, you will have not made any profit. But if you would have waited for the market to impulse from your entry and then move your stop loss to break even after this impulse, you would have walked away with a 4.71% profit. After the market impulse down and then it creates the next correction, you move your stop loss to above that structure, and at last it got to a profit target. We go to the next pair, which is New Zealand Swiss franc. On this pair, I'll show you on this pair. On this pair now, I'll show you why we move our stop loss to break. Why we normally move our stop losses to break even. On this pair, you can see the market was rising in form of a rising channel, and it was heading to a double top area. So we are waiting. We were expecting the market to move down. On this third touch here, the market didn't get to the double top, so we were waiting for the market to reach to the double top, but it never got there. But it was forming a double top and a structure within this structure. It was forming another wedge, which another channel, which is a structure within a structure and a double top with this. So on this, we entered with a risk entry on top here. After the double top, stop loss above the structure. We were patient. When the market broke this channel, we broke even, and then it never formed any correction. It started forming a bigger correction. And if you had not broken you had not moved your stop loss to break even, you would have ended up with a 1% or 2% loss. But because we had already moved our stop loss to break even, we end up we ended up making a small profit of around 2% because I had locked my profits just below this structure, because I saw that the market was creating a bigger correction, which might ended up going above our entry point and stopping us up. We look at the next pair. On this pair, we will look at how we scale in. After you get your first entry, this euro, this US dollar against the Swiss franc, you can see that it was in a structure. This was a structure and I was looking for the market to reverse from this double top. If you go down to the 15-minute time frame, you can see that the market reached to this double top and then impulsed down and created a correction, and we entered from that correction here, from right here. If you go down to the 15-minute time frame, you'll see that the market reached to this double top, impulsed down, and it created a correction, and we entered on the break of this correction our stop loss above this structure. And immediately after we entered, after 2 hours after we entered, the market impulsed away from our entry point and we broke even our trade. After that, now we were looking for scalings. Scaling is adding positions, adding trade on top of other trades, which we should never do unless you have already moved your stop loss to break even. You have removed any risk from your trade. After that, we were waiting for the next correction to enter after the break of that correction. This right here was a correction which I didn't enter because I had not woken up. I entered with on the next correction, this one right here. I entered after this correction on the break of the structure, my stop loss above the structure right here, and I moved my stop loss just above this structure. You can see after this on this these corrections, after the impulse correction, whenever you enter this impulse correction, you should always break even your trade after your trade gets to 1%. On this one, I was taken out on break even because I had already moved my stop loss to break even. The reason for why we move our stop loss to break even on these corrections is because the market normally does this. The market will impulse down, create a correction, you enter, and then it impulse down. When after you enter, it starts forming a bigger correction which might end up stopping you out. That's why on these smaller corrections after the impulse, we normally break even our trades after our trade reaches to 1%. So after I was taken out on break even, I still had this trade, which after the impulse, I brought the stop loss just above this structure, and as you can see, after a few days, it got to my profit target really fast because we normally our profit target normally we target the beginning of the correction, guys. That's has been that has been our video for today, and see you on the next video. Thank you for watching, and if you have any question, you can ask them down there on the comment section, and please subscribe and like the video and recommend others to come and watch the videos. Thank you.